Welcome back, fellow speculators. Speculator's Edge, where super performance begins and opportunities await. I'm your host, Louis Berg. So in this video, I'm going to give you a market update, let you know what's going on with the market today, and we're going to go over the Dow Jones, the S&P, the NASDAQ, the small caps, and of course the VIX. And then we're going to rotate and go over into the sector rotation, industry rotation, see where the money's piling into. And then after that, I'm going to go over a couple of charts that are possible buying opportunities, maybe tomorrow, maybe in the next few days, don't know. But other than that, and then after that, I'm going to go over my ratios. I should have done it this weekend, and I didn't because there's some important things developing right now within the markets. So other than that, let's go ahead and get a move on. We're going to start off with a chart on Dow Jones. And as you can see, we are still in an uptrend here. We did crack that 50-day moving average on down to some lows here, past that 33,500. But today was pretty strong, came back, and we did have a small accumulation day. Let me put it that way. It was only 2 times the distribution, so there's 2 times more buying than what there was selling. Okay. Which, I mean, that's not bad, that's not great. I'd rather see that, 5, 6, 7 times more than the distribution, okay? But it is what it is. So maybe here we can get back up to this 50-day moving average, up to the 10-day moving average. Don't know, but we might stall out right here if it does get up to that, or the 20-day moving average. We might stall out and just play around here for a little bit around the $34,180 level. Don't know, not for sure, not predicting any of this. But other than that, I mean, we'll see what happens. We take it day by day with trading, okay? So matter of fact, I think, maybe in the next week to 2 weeks, we might get something interesting either to the upside or back to the downside. So we'll see. Like I said, I'm going to go over my ratios. They kind of, well, I mean, they don't kind of, they do help you understand as to what's going on in the internals of the market, okay, with the stocks themselves. So let's go ahead and get a move on. We're going to move on to S&P 500 real quick. Still in this uptrend, still in a nice uptrend. Good day today within here. We did move past that 20-day and the 10-day, closed above those. That's good. Maybe we can get back up here to the all-time highs at 4,257. Okay, let's see what happens. Let's move on to the NASDAQ real quick. Let's see what we got going on here. NASDAQ, good day today as well. Hopefully we maintain these levels right here. As long as we can hold that 20 and that 10 for the meantime, and maybe jump up to all-time highs, that'll be great. That'll be good to see. That means trading will be good. It'll be a really good environment. So today wasn't too bad with trading. Not bad at all. Some pretty big winners today. TRCH and LDL. I mentioned those in the past video. But other than that, I was on top of those. So looking really good. So other than that, let's move on with the small caps real quick. And let's go look at the small caps here. So the small caps, okay, so it came up, closed above the 50-day moving average. Hopefully we can get up, move past the 20 and the 10-day moving averages, and try to make all-time highs again, okay? And hopefully we can do that within the small caps. If we do, then that'll tell us we do have a risk on, and meaning that you can get pretty aggressive. You can start getting aggressive with your position sizing and the way you're not necessarily managing risk. Keep your risk management the same. That is a huge discipline that you have to learn with that. So obey your stops is what I'm saying behind all that. But other than that, we'll see what happens here, this week and next week. So the volatility index, the VIX, came falling down, but it did surpass the highs of Friday's close, so or Friday's high. So we'll see. I think there's still going to be more volatility in this market, and I will tell you the reason why here in a minute, okay? Because one of my ratios do hint at that. Okay, so other than that, volatility index, like I said, possibly getting on up there again. We don't know. Other than that, let's go and look at sector rotation. What's going on with the sectors here? Where is money piling into? We still have technology going strong. Let's see, we have some industrials. Industrials are doing strong today. Matter of fact, they're doing really strong, stronger than technology. Healthcare, yeah, still doing good as well. A little bit of financial here, yeah, financials coming in, so actually it's the biggest one today. So lots in there. Energy, I know there's been several stocks, which, I mean, the two stocks that I'm going to go over are in the energy, and they're more in the oil and gas industry, okay? So I'm going to go over those stocks here in just a minute. And discretionary is okay. So it's still pretty broad, you know, money's still going into all sectors. So it's still pretty broad. That's a good thing to see. You know, there is one thing though that I didn't mention here. The all-time highs list is still pretty dry, or it's pretty low. So I don't like to see that. I want to see all-time highs list, you know, chugging along, and I want to see more stocks making all-time highs list here. But the uptrend pressure has alleviated quite a bit today since Friday. So that's a decent sign as well going on with the week. Also, you know, not too much of volume in this today, so pretty low volume today, which is okay. That's good to see. If you get really high volume, you know, it's more of a volatile day. So, but other than that, let's go see what industries are doing the best here, where there is institutional buying. So we still have software here on top. That's good to see. A little bit of pharmaceuticals. Let's see, industrial machinery. So that's kind of hinting at a little bit of what do you call it? Protection for big money wise. I know, because I've seen that during the 2020 crash, and then, or the market correction, let me put it that way, and the correction back in 2018. I saw industrial machinery in the industry pick up, and this is picking up a little bit. So it's kind of, you know, still word for caution here. Also, the exploration and production and energy, great. That's awesome. Means oil and gas must be doing pretty well today in the futures market. So that's the only thing I can think of. I haven't looked at the futures market, so I don't know that, but just by those stocks doing well, I'm sure that's the case with oil and gas today in the futures. Business support services here, so they're coming in a little bit. Like I said, industrial is one of the strongest sectors here. Biotechs looking good. And banks are your big winner today. That's the big one. So no telling what's going on with that. No telling why that could be with banks. I mean, there's so many factors, you know, being economically, of course, the Federal Reserve and interest rates, all that. Yeah, so I'm not for sure, don't know. But other than that, you know, stick to those industries, stick to those sectors and industries this week, and you'll be fine. Just swim with those. Just swim with those, and you'll be okay. So KOS here, Cosmos Energy. This one I like. I like this chart right here, just due to the fact this is a cup with handle right here. This being your handle, and we do have a massive breakout on huge volume happening right here. Okay. We did hit 52-week highs, as you can tell, $3.70. The only thing with this is the relative strength line here, or the performance line, isn't making all-time highs, or not all-time, but 52-week highs. That's usually what you want to see with that. It's letting you know that this is a, you know, it's a breadwinner. The stock is a breadwinner, and it could blast out of the doors just due to the strength. Okay, a lot of institutions do like to follow that strength, that type of strength. But other than that, like I said, this is a primary base within a stage 2 uptrend here. As you can tell with the moving averages moving up, we do have low volatility within this price action right here, also in here as well. So tightness in price, it's what you usually want to see within the handle. This is a cup with handle again, so nice volume right here coming out of that handle. Some volume dry up within the handle. That's good to see. That's what you want to see. Not only that, within this base, or within the forming of the cup, there is volume dry up, so, or volume decreases, and we do have significant buying within the handle. Okay, that's great, especially breaking out of that. If you're going to place this trade, I mean, this is kind of up to you on where you want to place your stop. Don't go anywhere over 10% on your stop of your total account equity. Don't ever do that, period. I mean, I don't even know why I even said that. Just tighten your stop. Keep it at 5% of whatever your position size is. Okay, that's how you stay safe. Keep your money intact. Okay. The other one, BATL, which is Battalion Oil Corp. And this one's great. The accumulation within this stock has been really good. We do have this, what's called a, let's go look at the weekly chart. This is more of a primary base, kind of a rounding cut with the handle right here, or you can even say, if you want to say, secondary base. This could be a secondary base with a double bottom with a handle right here. Okay, but this stock is breaking out today to 52-week highs on the daily chart. Of course, it has some very nice demand here within the handle, as you can tell. So within this double bottom, like I said, this could be a secondary base, and I'll put it more towards that as a secondary base. I did buy this stock at $14.20. Of course, it's up 6 cents, so that's good to see, but we are making 52-week highs. We do have nice, low volatility within this handle right here, and that's what you want to see. So a nice tight price range within the handle. And then boom, breaks out on nice demand, follow through with price action as well. We do have volume decreasing within the handle. We want to see that. So as it's breaking out of that handle, we are increasing in demand. So other than that, I mean, if you're going to place your stop at the low of today, which was at $13.17. Go about 3 to 4 cents down below that to place your stop. So around $13.14. So you want to kind of hold on to these stocks just because of the volume and demand. There's a lot of rotation going into this sector and industry. Okay, so other than that, let's go over the let's move on over to the what do you call it, the ratios that I have for you. So these ratios are very important. They are my life work, and I want to talk about them a little bit as to what's going on here. So I do have a trend ratio. This is a measurement of how many stocks are in a strong uptrend towards how many stocks are in a strong downtrend. Okay, so as you can see, we did have this nice down, or not nice, but we did have this downtrend here, making high lower peaks here back in from 221 of 21. Down here to around 423.21. So in the markets, weren't that great, and they were a little rough. They were actually pretty difficult to make money in. If you were day trading, not too bad on making money. I mean, if you follow Mark Minervini, he has a couple of strategies, where he works on swing trading and short, day trading as well. Kind of like day trading, not necessarily, but he's quick to take his profits. Which, I mean, good for him, because he's up, over 156% in the financial competitions. So good job on that one, Mark. Keep up that good work. So yeah, he's awesome. But other than that, this one here, it starts coming out. This line here, the trend line starts coming out, and we did decrease last week. So the uptrends did decrease. But maybe this will work out and move up, and that'll let us know that this trend is still really intact and that we're moving up in a stronger uptrend, okay, within the stocks themselves. So we'll see what happens this week and next week. The uptrend pressure, this is my uptrend pressure ratio. Of course, Investors Business Daily has one too, but mine was calling not last week but the week before that there has been some pressure on the uptrends. Okay, and we got a huge line here, a big run up to the upside with the uptrend pressure ratio with that line right there. As you can tell, back in May we hit a peak at 197.8, and so we'll see. Maybe the uptrend pressure actually alleviates this week. But if it does, I mean, there's still caution, because this market it can get out of whack. Like the old saying goes, stocks usually take the stairs up and they take the elevator on down, and that's no joke because they literally waterfall. And if you looked at, back in 2008, even 2000, 2008, and of course, 2020, if you watch that slide in stocks, oh man, it's like a waterfall. It happens really, really fast to the downside, and it's hard to stop the bleeding, okay? But other than that, I mean, for now, I'm sure the uptrend pressure will alleviate a little bit here. Other than that, I don't expect it too much, but we'll see what happens. This isn't predicting. These ratios aren't to predict, and they're not to forecast. They're just to give you an idea as to where we're at within these stocks, the individual stocks themselves, okay? So it's the gauge. These are gauges for the market itself, okay? And that's what's going on with the internals, okay? So other than that, let's move on to the activity, the high-low volume. So this is a measurement based on high-low volume. As you can tell, all this is really a measurement for volatility. So really, when you start getting that accumulation or distribution going, it can be like, especially with high distribution, if we're at inflection points, the activity will tell you, what's going on where we're at within the market at that point, and it tells you if we're about to get volatile, or or if there's going to be less volatility. And as you can tell, there wasn't very much volatility back from around March to May or June, so not much volatility. But now volatility, there's so much volume coming in now that it's shooting up, it's starting to increase, and that's a concern right there. So if we're now entering into more of a volatile market, if the conditions are getting volatile, then you got to be very careful, because as you enter in on your stocks, on your entry prices, and you're timing it, they might break out, but then the stocks will pull back and stop you out. And you just got to look at your trading results to understand that. So, I mean, you can tell if the last, 4 out of 5 stocks were losers. Okay, the market's rough. Okay, you only had one winner. So other than that, with this increasing, it isn't concerned, because that means that volatility can still pick up. And that's what I was meaning by the VIX. With the volatility index, as it made a higher high than what it did on Friday's close today. That's not necessarily a good sign, but I mean, it did end in the red. But I mean, that's still, so what? With this right here, this ratio, the activity ratio, that's a cause for concern right here. So what could happen is, the markets might tread along a little bit to the upside, and then kind of just meander or peter out, and maybe next week we get very volatile again, or the week after we get volatile again, and price may drop down, and in the indices themselves, the indices might drop, and or it may go up. We don't know, so we take trading day by day. But I'm just letting you know that this is a cause for concern right here with this activity ratio, and I'm a little concerned. I'm trading, of course. I don't want to miss opportunity. I want to make money, but my stops have been tightened up, and I'll take what I can get. So other than that, we're going to look at the weekly average close up down ratio. All this is a measurement of accumulation versus distribution on a weekly basis. Okay, so I take all the stocks out of my list, and out of my chart list there, that have had an accumulation versus distribution day through the whole week, and that's how I get that measurement. Okay, and this one here has hit a low at 0.56, as you can tell right back here. In October of 2020, it kind of got down to those points, to the 0.5 level there, and then all of a sudden, boom, it came back up. And those were some pretty good buying opportunities. I mean, these are some really good buying opportunities. But as you can tell here back during the correction, before it really got underway, or when it was getting underway, it hit down here at around 0.58, and then it bounced up and then, you know, a couple of weeks later, about 3 weeks later, it hit this low here at around 0.32 right here in February, in the middle of February. Well, of course, this was a cause for concern still, because there was more distribution than what there was accumulation. But then all of a sudden, following about 3 weeks later, well, we have some really good accumulation happening on a weekly basis, and that began the next market, bull market up. Okay, so that's important to see right here. Now, what could happen with this here is that by this week, it'll either, you know, kind of just meander around here around the 0.5 level and kind of just, you know, slightly fall off, or it could just fall down here and get down to these lows here back in April of 2020, you know, I'm in February of 2020 in March. So no telling, or it, you know, it could bounce back up and you know, bounce back up, and then the next week fall back down. You know, we don't know what's going to happen, but you know, this is a low reading, and this is kind of hinting at there is opportunity coming. Okay, that's what that's saying, because distribution is at a low point here, and it kind of represents a good buying point within the market. So don't know that, but I'm trading and I see some interesting opportunities right now. So we'll see what happens here. And then this last one here, this one is extremely interesting to me. It's the Friday close up down ratio, which is based on a Friday's accumulation divided by the distribution, okay, within the stocks. As you can tell, when it gets down to around this 0.5 level as well, it usually hints at really good buying opportunity for the following week to 2 weeks, okay? But it did surpass the low of the market correction there, which was at 0.33 and 0.32. As you see with this double bottom, boom, it was, you know, the market was ripe and ready to go into the next bull market phase, and that's what it did. But each of these dips right here just was more of an alarm for a buying opportunity, letting you know, look, there's opportunity coming in right here. So, I mean, you know, with these with this being at 0.31, I don't know what can happen right here. I don't know what's going to happen, but you know, it could possibly maybe even dive a little bit more this week. I don't really expect it to, but I expect it to probably come up this week, this Friday, and then you know, maybe we might get another downfall right here, and the market, you know, starts falling by the in a couple of weeks, 3 weeks. Don't know, you know, this isn't predicting, this is just getting an inference and kind of seeing the possibilities, you know, which way the market can be or it can go. And that's important. So, I mean, you got to kind of think ahead, and it's kind of like, you know, playing chess, okay? It's that same type of strategy. You got to think ahead, okay? And you got to try to see it in your head, imagine it. So, but other than that, I mean, this could represent a massive buying opportunity right here just because of that. And maybe we get up to these, you know, 3.5 levels right here. I don't know, you know, I'm not for sure. But I'm going to tell you right now that this ratio right here slacked off 2 weeks ago, and you can see that there was distribution happening. Not this past Friday, but the Friday before, which would have told you, look, going into the trading environment next week is not going to be necessarily good or bad. I mean, there's nothing, you know, there's no such thing as good or bad. It's just, it may be rough. It may be a tough market to start trading, you know, and that's the thing with that, and that's the thing with these ratios. These ratios really give you the hint as to what's coming up in the next week or two. You know, they're kind of letting you know as to, you know, what could possibly happen here. And that's what that was hinting at, was that, yeah, look, trading is going to get a little tough right here. So maybe not this week. Maybe this week is an excellent time for trading. I know I'm trading. I'm trading because I'm taking the breakouts. I'm taking what I see as opportunity. And that's what it's all about here at TSC. We thrive on opportunity. That's what we want to see. It's opportunity all the way around. So it doesn't matter if the market's bad, if the market's rough, or it's, you know, or if it's in an uptrend or downtrend. You know, there's always going to be opportunity where we're at. Okay, there's always a chance to make a lot of money on the upside or downside. Okay, so we just got to be prepared, mentally prepared, physically prepared, emotionally prepared, and spiritually prepared. Okay, and just stay disciplined, keep your money tight, make sure you don't lose much, make sure your account doesn't go 5% or below of your total account equity. Okay, you don't want to lose that much, so try to keep it tight, tighten up your stops if you have to. Examine the way you're trading, the way you're looking at stocks. Be selective on what you're trading. The breakouts that you're trading, the quality of the stocks. Everything on that, and then that's what you have to do. Okay, this is a Warriors game. I know for a fact. So, but other than that, I just want to go ahead and I'm going to go ahead and leave you off with that right there, and I hope that you found that interesting with that, with these ratios, and I hope you enjoyed the video, found it educational. If you have any questions, please leave a comment, like the video. Other than that, if you have any questions, I'll be more than happy to help you with that. So other than that, thank you again for watching, and here at TSC, we trade in the present, study the past for knowledge, and follow the process of trading to build our future. So I will see y'all tomorrow, okay? All right, opportunities awaits, my friends.